Well, Sam Bankman-Fried stealing the headlines, but crypto is about more than just one man. So where does the investment community stand? A new report by Glassnode gives us a sense of the trends since FTX's historic collapse. Our first chart shows realized losses over 7 days in November, meaning the loss incurred by selling an asset. It shows the fourth biggest capitulation event on record at $10.16 billion. Now, that's 4 times larger than the peak in December of 2018. We can also quantify the scale of unrealized losses relative to the market size. Bitcoin holders saw losses peaking at 56% of the total market cap, the highest for this cycle and comparable to prior bear market floors. SBF, as we've seen, has been speaking again. This morning, he was on Good Morning America. Take a listen to what he had to say.
I wasn't spending any time or effort trying to manage risk on FTX, and that obviously
that's
that
a
was
stunning
a mistake.
Admission.
What?
That's a pretty stunning admission.
Yeah, I mean, I don't know what to say. What happened, and if I had been spending an hour a day thinking about risk management on FTX, I don't think that would have happened. I think I stopped working as hard for a bit. Honestly, if I look back on myself, I think I got a little cocky, maybe more than a little bit.
Well, is this a question of people over protocol? Are we risking throwing out the baby out with the bathwater? Joining us now is Julian Figueroa. He is Kinetic Finance channel host. Julian, it's good to talk to you. And I want to set up this conversation by talking about why we reached out to you initially. You did have funds in FTX. You did lose money as a result of the collapse. Talk to me about the direct impact. How much did you have in funds and how much did you lose?
I don't want to put a specific number on it, but call it like a year's salary for, somebody working in this industry. As for the impact of it, it's a year's salary. I'm a young guy, me at my age losing that amount of money versus somebody who was in their 40s or 50s. Big difference. And personally, I also knew other people on that platform who lost, upwards of high 6 to 7 figures. So compared to that, I'm in a much, better place. And yeah, I feel already that I'm moving on from it, just specifically being somebody in this space that is more about education rather than trying to extract as much money from it as possible.
With that said, what do you make of what we've heard from Sam Bankman-Fried, not just at the New York Times Deal Book event yesterday, but from GMA this morning, saying essentially this wasn't fraud. I just simply was in over my head.
You can have both things going on at the same time. It can be a case of fraud that you knew was going on and you willingly overlooked it. What I see when I watch the interviews of Sam Bankman-Fried, just from a body language perspective, is he's shivering, he's looking down, it seems that his trajectory with all this media is going in the way of almost eventually pleading to some form of insanity or something going on here. It's kind of publicly known that he took a lot of amphetamines while he was on the job. It feels like all this has been ill-advised against, the advice of his lawyers. So I don't know where this is ultimately going, but, for him, I wouldn't be out on camera doing these interviews, miswording things like he has when this issue is so much bigger than him. The millions of lives that have been affected by this, he seems to just have no empathy or understanding of the damage that he's caused.
And in terms of trust, because a lot of crypto and Bitcoin educators who are online, we're seeing their comments filled with a lot of backlash as well. I see you still have your Satoshi T-shirt on there, so it still seems that you're still holding on to this. What is still giving you faith at this point, Julian?
What is giving me faith at this point? Well, I think one of the things that has come out of this that I kind of view from an educator standpoint is that we need to have a very clear delineation between what Bitcoin is and what cryptocurrency is. Bitcoin was invented in 2009. And if you actually look at Satoshi's white paper, the word cryptocurrency and even blockchain don't even appear in it. These are things that were, coined years after, and they've kind of become their own industry in of itself. A lot of people comparing it to kind of the internet bubble back in, the 2000s, where essentially you had a buzzword that was built on top of, and people got millions and billions of dollars of funding to build these apps, these bridges to nowhere. And then you had the genuine innovations that actually use the technology. Bitcoin, I see, is like the TCP IP, which a lot of people don't even know. It's the backbone of the internet itself. And the way that I see Bitcoin moving is it is going to be around long past you and I. It's going to be churning out block after block, years and decades after we're, dead in the ground. This is a protocol that was built to last forever in permanence. It's a digital money for the entire world, and we need to kind of coalesce and start to understand how that is separate from the rest of the cryptocurrency industry, which is a whole lot of grift and Ponzi schemes.
So what's the lasting impact coming out of this, Julian? I know when we spoke before, you said, number one, it is about money being withdrawn from exchanges and really kind of going back to that decentralized system that so many bought into initially.
Yeah. So, this is what makes Bitcoin such a unique asset, right? Like when you have stocks or ETFs and all these things, they don't function unless you have another counterparty like a stock brokerage or a bank to interact with it. You can't really take possession of a stock, I guess, unless you had like a stock certificate. But even then, it's third counterparties that you always rely on to take possession of these things. And I think now, because of this FTX thing, you've gotten this level of distrust among all exchanges, and people are finally utilizing the killer app, the killer feature of Bitcoin, which is that you can take full possession of your assets and nobody can take that away from you. It's just lines of code. It's just a public and a private key. And it's been a very expensive and painful learning lesson for a lot of people in this space. It's not even my first time that I've been rug pulled by an exchange, but it's further evidence that we need to have a digital financial system where we have complete control over our assets and we don't need exchanges. And frankly, to anybody that's looking to invest or to take a part in this whole industry, it's important to realize that you can just hold your own funds. You don't need to have a custodian. It is a little bit daunting at first. There's a technical level of, having your own wallet and setting that stuff up, but it's not nearly as complicated as, some parties make it out to be. It's an hour of, YouTube tutorials. And once you get that down, nobody can take your money and nobody can take your assets. And I think that is a beautiful piece of technology that we need to leverage and explain to the world a lot better than we are today.
As they say, hold your keys, hold your crypto. A big thank you to Julian Figueroa, Kinetic Finance Channel host. Thanks so much for joining us.